The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it's definitely an interesting week in this market trade. Still feels like heading into the weekend, there is plenty of that uncertain headline risk that could be at play in these markets. Tough week in cattle, I will say, futures wise anyway. And I'm just getting back from the Cattle Industry Convention and NCBA trade show in San Antonio, Texas, and at least finding a small amount of green in cattle futures to end the week, or at least trying to. Really just, again, kind of a risk-off mixed bag. Let's take a big picture perspective at what we're seeing in the trade here this week. Joining us now, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, thanks for joining us. And man, I've been running around CattleCon in Texas and trying to keep my eye on the market, and it just feels like it has been a volatile week across the board, Brian.
It's been a volatile week across the board in a lot of commodities. Cattle, of course, no exception. They rallied sharply into the end of January and then fell off in February this week. So a lot of overbought type conditions, and you wonder just when things might tumble out. Well, that seemed to occur here right when we turned into the first part of the week. Big movement also in the grains early on in the week with tariff talk and tariffs on, tariffs off. So a lot of movement there as well. I think when you cut through on the chase, we continue to see a good export sales number for corn again, above the 4-week average. So we continue to sell corn and sell it around the world, and that's encouraging. Corn prices, though, kind of run into a wall near $5 on the May and July contracts, a little bit under $5 for the March, and at $4.70 in December. So that's kind of stalled. So yeah, interesting week. Didn't mean to ramble on there, but a lot of things kind of transpiring and shifting and politics, and you bet.
I just wonder, you mentioned a few of the price levels, and I think about this $5 mark in corn, and we kind of got the 1080 range and some beans here a little bit in front months. But I have to think that we've talked about this now for several weeks, the farmers selling on this rally, especially heading into a weekend of, more headline risk and uncertainty. And with all this tariff on again, off again, on again business that we're seeing, and et cetera, just feel like farmers are kind of leaning into taking some profit here a little bit, Brian.
They've leaned into selling cash, right? Whether that's a profit or not, we don't know, but probably for most it is.
Yeah.
It's a good pay raise compared to where prices were 3 or 4 months ago, and it is a real issue. When prices are low, what do, right? So if you did manage to kind of sit it out, you did get a pay raise, right? Maybe you're selling some corn profitable levels now. Hopefully you should be. Looking ahead, too, farmers have that consternation that, well, this new crop corn. So it's never easy, right? So finally getting above your head in the old crop a little bit, and new crop, you're not really above, head's not above water yet. So do we manage that? But the good news is on all of this is the markets have moved. We've saw a lot of money come into corn and soybeans when, it didn't look like there was much hope. We're seeing good buying. We are seeing some weather developments in the southern hemisphere. I'm just hesitant to assign any significant crop change in production relative to what the weather's been so far.
I know you spent some time this week at the Wisconsin Corn Soy Expo. What were some of the key consistent questions maybe you got from producers while you were at that expo? Was there a consistent theme maybe you heard from folks?
Yeah, I would say the consistent theme is, can we see the new crop corn get to $5, right? So it's sitting at that 470 area. Can we get it to $5? And you're not that far away, right? But the other consistent theme was, as you talk to producers there, it was either I made some cash sales and I'm thinking about making more, or I'm getting close to where I want to be on sales. So this has been a real catch-up time. And the interesting thing there is, with as many farmers who I think have sold inventory the last month, the market still moved up. So it's absorbing those sales. And why is that significant? I believe in 2024, It's my best guess, but this is coming from my elevator guys or people who buy, that this was a year where the farmers had the least amount of corn sold in recent memory, maybe ever, in advance. So to get this price recovery and see farmers sell into it, that's a lot of bushels. I call it an army of farmers. There's an army of farmers selling bushels into this, and yet the market continues to sort of move upward. And that's testament to the managed money going from short 350,000 contracts ish in summer to long nearly 400,000 contracts. Pretty an amazing turnaround in the money flow, in particular in the corn pit. But we're seeing positive money flow into the bean pit as well.
You mentioned funds, and I know we'll get a look at the updated commitment to traders late Friday afternoon. Just wondering about this fund movement in a lot of these markets. I know sometimes we could see it, with open interest and more, and take a best guess. But does it feel like the funds are really in the most control in some of these grain markets right now, Brian?
Not in wheat. Well, what do they control, right? So
Yeah.
where are they positioned? So they've been net short wheat, and so wheat's your biggest sleeper right now. And in fact, I want to say this week we might be seeing some reversals of corn wheat spreads, soybean wheat spreads. I think wheat's your dark horse. You've got some problems in Russia that I think are real, and you've got some substantive concerns with, I think, wheat in North America as well. So wheat's the sleeper, but the managed money, it's been so impressive in the corn market and back to soybeans. And if you think back a little bit, the reason that in part is because one, it was, so there's three criteria. One, it was just a real value, cheap,
Mhm.
cheap corn, right? $4. I know, when therefore we're talking it could go to 350 if the yield just keeps getting bigger. Well, the yield didn't. So the one is you had cheap corn. Two is you had USDA reports that really changed the vision. You dropped corn yield near 5 bushels an acre from its peak. Soybeans, oh, what, 3 bushels an acre at least from its peak. And that changed the tone, and that took carryout numbers and started trending them downward. And if you want to find a study that looks historically a good study to watch, look at the trend of carry out and then look at the trend of price. There are a lot of times they're inverses of each other. So we've had the rally, but we're kind of at this crossroads here. Now we're at the $5 corn, 10.50 bet plus beans. Now what? Right? So now the focus, I think, goes to South America. And that's why I mentioned that earlier in the program, that as South America really goes, we're either going to now get the second leg of a corn rally that's going to happen faster, or it's going to just run out of gas. Right now, I don't think I have enough weather to tell you I'm a believer that we're ready to make the next leg higher.
And that weather forecast, we're going to be watching that closely as we get into the middle of the month here and beyond, and just see what we can figure out down in South America. It's very pivotal right now for sure. I want to go over to the livestock trade a little bit. Obviously, a big down day in futures for cattle Thursday. Kind of quiet Friday, though, but we've been wondering, are we putting in a top in cattle, things of that nature? I don't want to do that, the call on the top thing, but what do the charts tell you in this cattle trade right now, Brian? What are you watching?
I really don't want to get and call the top thing either. However, markets have a tendency, in particular livestock, to peak or to find their low on V tops or V bottoms. And what that just means is you kind of go straight up and then straight down. You got this either inverted V or a regular looking V. So on the top, you've got an inverted V. What it's telling me is that the market kind of hesitated to believe that demand can keep up. I think I saw a statistic this morning that 56% of American households have less than $1,000 in reserve. So they're kind of paycheck to paycheck. Uh, anyway, we've been talking about numbers similar to that for some time. So, can you build and hold demand at higher prices just because you have a tighter supply? So, a couple of dynamics in the cattle market. One, it rallied into the cattle inventory report. Inventory report confirmed, yeah, we got a smaller herd. Down another 1%. Now we need to go back more than 50 years.
It's going to be interesting to see how this all kind of shake, just all the dynamics at play in this cattle market, Brian, how it all shakes out.
You got to have demand at higher prices, and we saw that this week it faltered. This
Mhm.
past week, where we saw the cutout values all of a sudden just peak and drop off pretty hard. They're still at a high level, and the herd is still small. So I don't think we're turning into a bear market, but the market was due for a correction. It's got its correction. Now it's a reset to see if it can hold in the $200 area. And cash trading above that right now. But if that's going to come down to the 200 or less area,
Mhm.
I'd probably argue it will, just because that was a high price.
Very true. It's something to watch. Love to get your thoughts in the dairy trade as well as we're wrapping up the week. What are you watching there, Brian?
Well, if you want to throw volatility in the mix, throw it in the dairy market as well. Same thing, really volatile, right? So you've got economic concerns, you've got tariff concerns, lots of volatility. Tariffs on, market crashes. Tariffs off, the market rallies. Looks like we're going to end the week on a soft note, though. Um, the interesting thing about the dairy market, it just looks like it's a market that has just a little bit too much inventory. And when it doesn't take long for the market to drop. So one of the key points to watch in that market is, well, okay, you talk about this inventory. What are we talking about? Really talking about the cheese market. So you've got blocks and barrels, and we see how it goes in the cash market here. I was just looking today, down 2.5 cents in the barrels, but at $1.78, so or 17.80 per hundredweight. The blocks, 186. So I just eyeball the two. It's about 18, buck 80 times 10. That's about where the futures market in dairy theoretically should be, with butter prices low and whey prices on the defensive here as of lately. Well, that still puts the dairy futures market too much premium. So while the market factored in some things that are bullish, ultimately we're still not seeing enough increase in product value price to sustain a bull rally. So the complication is, or implication is, when the rallies come, see where that cheese market is. If it's not leading the way, be a hedger.
All right. Final thoughts, Brian, as we close out the week. Anything you want to mention or reiterate to folks?
What I'll reiterate is that the last 2 or 3, 4 weeks, really maybe since August, we've seen a lot of dynamic changes in the market. So just stay on top of things, be prepared. Volatility might just be cranking up, and volatility is scary for a lot of people, but volatility is also opportunity. You just got to stay on top of it. Recognize the markets can pivot kind of quick. So don't beat yourself up if you sell today, it's higher tomorrow. Boy, you shouldn't have sold. Sell some more tomorrow, because the next day it might be crashing. These are good levels to light load an old crop corn for sure. So my focus would be on, look, if you had a good corn crop and you had a lot of inventory, make sure you're keeping your pay raise.
Brian, if folks want to reach out to you there for some advice, talk with you about things at Total Farm Marketing, multiple ways to get in touch, how could folks reach you?
Yeah, easiest phone call, 800-334-9779, Jesse. Email Brian with a Y at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. Good resources there and ways to communicate with us.
Always appreciate the perspective, Brian Doherty with Total Farm Marketing. Thanks for being with us, and have a great one. We will talk to you next week.
Jesse, thank you very much. Appreciate the opportunity.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.